Okay, thanks for joining me, guys. Today I'm doing a revision topic. It's going to be bank reconciliation because it's been requested quite a few times. So let's do the video. So the basis of a bank reconciliation is simply when book cash does not equal our bank cash. So let me explain that. So the money in our book, so our T account, our ledger, which we have at our business, is different to what the amount of cash is in our bank. So what we predict in the bank is different to what's actually in the bank. So it's just actual and predicted. It's just what's the difference. So why don't we just go through the basis of the layout. So first of all, what you're going to do is you're going to update your cash book. So first thing, update cash book. That's before you can even go into the bank reconciliation. Now we can go into the bank reconciliation. So you're going to start off with your updated cash book balance. Then we're going to add something, minus something, it's going to give us something. So it's going to give us our bank balance. It can be called other things, but I think bank balance is probably the most simple and easy to understand value. So we're going to add unpresented checks, and we're going to minus outstanding lodgements. So what do each of these actually mean, unpresented checks and outstanding lodgements? Well, an unpresented check is simply when we've made a check to someone and then they've received it but it hasn't been paid into the bank yet, because it takes time, obviously, because it's got to get posted to them, they've got to receive it, they've got to take it to the bank, and the bank have got to process it. So why don't I do just a little diagram to highlight what this actually means. So two people, Tom and Harry. So let's say Tom sends over £200 on the 1st of October to Harry. October. Okay. So this is basically an unpresented check for Tom. He sent over £200 to Harry on the 1st of October. So what Tom will have done is updated his book cash. He'll have gone, right, oh, we've sent out £200, let me minus that away from our cash balance. However, Harry may not receive that till, say, the 6th of October. So only will Tom's bank cash be affected on the 6th of October. So that, you know what I mean? So there's a 5-day period where them two values were completely different by £200, plus any other differences such as interest and charges. So that's one way to highlight that. So timing differences is one of the main things why we do a bank reconciliation. Also, one other thing that I thought of where there's a reason behind why we do a bank reconciliation is bank interest and bank charges. So say if you get 20p interest on your bank account, your books are not going to show that because it only comes up on your bank statement. So you have to transfer it from your bank statement to your book cash, your cash book in your ledger. So we've got two things here, unpresented checks and outstanding lodgements. One's added, one's minus from cash book. So how do you know which one? Well, simply, as I said before, unpresented checks where you've made a check and that it hasn't come out of your bank yet. Well, outstanding lodgement's receiving a check, you've paid into the bank yet you've not got the money in yet. So you could just say that's where you paid out and that's where you've paid in. However, what I was taught at college, which was a bit cringy, is an acronym to remember which way round add and minuses go. And you see, we're plussing unpresented checks and we're lessing outstanding lodgements. So what's an acronym for less outstanding lodgements? Well, it's simply LOL. That's it, really. It's really cheesy, but it worked for me a lot. And yeah, less outstanding lodgements is LOL. So now, what I thought I'd do is move on to a past paper question. So here it is. It's from Jan 2012, Aken 1. And It's just like what I've explained before. We have to update our cash book and then do our bank reconciliation statement. So what can we ascertain from our information here? Well, we've had a cash book and we've been given a brought down at the end of it, and we have a bank statement, and the brought down at the end of it is different. Them two values are different. So let me highlight that. 698 and 1207, obviously different. So what can we take from this? Well, first of all, what I should highlight is, as you can see here, a debit at the bank statement is on the other side. So we I'll start actually. Brought down here in the credit of the cash book. That's obviously bad. Credit of the cash book is bad. That means we've overdrawn in a way. Whereas the bank is the opposite. If you're doing second year college accounting and you're doing dissolution of partnerships and you're dealing with current accounts, you'll understand what I mean. A debit in your bank statement is bad. So technically that's overdrawn, even though the brought down is on the debit for the bank and the brought down for the cash book is on the credit. They're both overdrawn. So just make sure you understand that. Don't get confused saying, oh, debit, oh, it must be good. It's not. So what I could take here for example, we've got a brought down here of 988, obviously overdrawn. We've received 80, so it's brought us up a bit. We've gone from negative 988 to negative 908. However, then the bank charges make it worse. We fall deeper into our overdraft from 908 to 993. So just look at the transaction and see how it affects the total, then you can sort of figure it out. So as I said before, we're going to update the cash book, and then we're going to go into our reconciliation statement. So let's start off with our cash book. Right, well, we've been given a balance brought down, so we can start with that. And the balance brought down is 698. Right, so should we just deal with the easier things first? Right, well, we'll start with bank charges. Bank charge 85, and we've fallen deeper into our overdraft, so it's obviously going to be bad. So bank charges 85. Okay, so how do I basically everything that's in here that's not gone into there needs to go into there in a sense. So I'll do another example. So bank interest, is bank interest in there? No, it's not. So bank interest 46, it's on the credit, so it's going to go into the debit of our cash book. Also, bank interest obviously good because we're receiving the money, so you can kind of ascertain that it's going to be a debit 46. Okay, so we've done that one. So let's do the direct debit at the bottom. That's quite an easy one to understand. So direct debit, shop maintenance limited, debit 316. So it's the opposite. So it's actually gone out. We've paid it. So I'm just going to put shop maintenance. 316. Yep. Okay, two more to go. I'll leave the complicated one to the end. So, Paul Hunter, unpaid check. Well, he also appears here as well. So, what's happened here? Right, well, I'll show you. It's actually very easy, so I'll just use my highlight. So, we thought we received the money here, 80, and we did. 80, so the money's come in. However, the check then bounced. It returned unpaid. So, we've done one entry. We've done the double entry for that one. We haven't done the double entry for this one. So now we're going to have to put this in the credit. So you see we have a debit here, debit of 80, credit of 80. So we've done that, perfect. We've done our debit and credit of our T accounts, the basis of accounting. Now, we've done the debit in our bank statement, we haven't done the credit in our cash book. So, as we always know, every transaction needs a debit and a credit, so we're just going to put P Hunter You can put in paid check in brackets, but you don't have to. Easy. Okay, now moving on to the more, not tricky, but it could confuse you. So we've got Umar Alam, I think that's the name, I'm not sure. 163. We also have Umar Alam here, 136. So what is this? Is this an error of original entry? Is it we thought we were going to get 163, but we only got 136? What is it? It doesn't really matter. It's going to be the same resolution. The same solution is going to occur no matter what we think. So our debit side is too high. So let me just I'll do a bigger pen. So we've got my T account here. Doesn't need a title because it's simple. We put 163 on our debit from here. We've only got 136 here. So we need for these two to equal each other, x equals x. We're going to need to add something onto here, which I think is 27. So now they both equal 163. So we need to update our cash book. So what we're just going to do is we're just going to put Umar Alam. I hope to God I'm pronouncing his name correctly. I'm sorry if I'm not. 27. And now what we do is so we've updated the cash book now, so it's just a simple balance carried down, which is 1160, and then our two totals are 1206, I believe, 1206. Brought down at the end is 12. Oh no, sorry, it's not. It's 1160. What am I thinking? Sorry about that. 1160. That is not. I'll try it in bigger. Brought down 1160. So now we've updated our cash book, we can start the bank reconciliation. That's what we can do. So here we are, 4 marks, so it's just 4 figures really. So we're going to start off with this updated cash book balance. So cash book balance 1160. Right, we'll just do the layout for now. So add, minus, equals unpresented checks, outstanding lodgements, and then those are all going to be taken away and added respectively to the cash book balance to give us our bank balance. Okay, so what is what? Okay, well, as I said before, this is cash out, paid out, and that is paid in, outstanding lodgements. So cash out, the only one I can see is K Hill. I can't see any other cash outs really, so it just must be K Hill, because it's appeared in our cash book, but it's yet to appear in our bank statement. So we're updating our bank balance now. So basically this is just going to be adding 208. So I'll put in brackets next to it, I'll put his name next to K Hill, just so you know what it is. K Hill. So next one, outstanding lodgements. Okay, so something in here that's not appeared in here. Right, well it can't be P Hunter because we've already dealt with that up here. And we've also dealt with Umar Alam. So it only leaves M Burns. Whether that's a Simpsons reference, I'm not sure, but take away 255. And that is M Burns. And then that's going to leave us with a bank balance. If you do that, add that, take away that, you're going to get 1207. And how do you know that's right? Well, it's very easy to check it's right actually. It's simply 1207 equals 1207. Your cash book equals your bank balance. Well, no, it doesn't. Simply, you've reconciled it. You've gone from your cash book to your bank balance perfectly. So it's not simply your cash book now equals your bank balance. You've worked out why it equals your bank balance. And that is it, basically. Next video I should be able to do soon. I'm doing it on scheduled non-current assets, and I might do an ACON 1 or an ACON 2 paper. And then I'm on requests really. I think I've got a few requests lined up, but I'll see what I can do. So thanks for watching. Don't forget to subscribe. I think it just leaves you a notification. I don't understand what subscribing does, but whenever I bring in a video, I think it just tells you. Don't forget to recommend me to friends. I want to help as many people as I can. Recommend me to teachers. Anyone really. I just want to help as many people as I can. And I'll see you guys in the next video.